to the, as we would believe, the Western spin, I mean, it's as if the BRICS summit never happened. Yet, under the covers, the gateway to tokenize and financialize trillions of real-world assets has opened. Let's dig into the question, because this ultimately leads to a consensus of liquidity providers pricing gold at a fair value at $8,000. We discussed it last time. And as we recently indicated, silver well into the 3 digits. Now, while this gateway opens up every single commodity to be traded and settled intra-BRICS national currencies, we've been focusing on the West's underestimation of the BRICS nations' ability to actually take full control of the gold-silver price-setting mechanisms, and how, through the formalizing of the financial infrastructure to support a sufficiently liquid global settlement process, the CME, LBMA will increasingly become price takers, not price makers. And this is happening under our noses. And we will see, as we'll see, this is actually central bank driven. And so, responding to Trump's warning to the BRICS so-called war on the dollar, let's start by looking at what Russian Foreign Affairs Minister Sergey Ravkov reiterated yesterday, and basically he said, no one in the BRICS community is raising the issue of replacing the dollar. The alternative is to switch to settlements in national currencies. That's the path we're taking with BRICS. So really, you've got two different views here. Now, what's being missed by the dollar hegemons? It's not an attack on the dollar. It just means that intra-BRICS trades will be cleared outside of the dollar. Now, Western-facing commodity traders will continue, these trades will continue to be settled in dollars because they face the West. But, and a very, very big but, the price will be influenced by the BRICS nations' physically determined supply-demand prices. And this will be most evident in the real supply-demand pricing of commodities that are also crossed against global-facing foreign exchange markets, of which gold, silver, platinum, and palladium are crossed against. Obviously, not all commodities. In fact, no commodities other than gold, silver, platinum, and palladium are actually crossed seen as money, as a foreign exchange cross against the dollar and the euro, yen, etc., etc. Now, the BRICS multipolar global price discovery process is not just contained to the foreign exchange crosses in gold, silver, platinum, and palladium. In aggregate, including oil, energy, and rare earths, the BRICS nations are estimated to produce, consume, and ultimately control some 85% of an 8 trillion a year global commodities complex. Along with precious metals, as we are going to see, BRICS nations are going to become the price makers, not just in the precious metals complex, but also in every single commodity they touch, utilizing the trustless blockchain rails, the tokenization, financialization, and a 7-second settlement process will ultimately dictate a truly multipolar price. Clearly, this is going to backwash into the leveraged, asymmetrically imbalanced derivative markets, which gear around all of these products. Now, what we're going to expand on from our last episode is how, beginning with gold, silver, and all monetary assets, every single real-world asset is in the process of being tokenized and financialized to trade and be settled outside the weaponized dollar-based system. And as we drew attention to during the BRICS summit, backed by central banks, sovereign, and fresh safe haven physical demand, we have Singapore, Shanghai, Hong Kong, Saudi, Brazil, Africa, Southeast Asia. They've already aggregated sufficient physical market liquidity directly benchmark a global physically determined supply-demand gold price. Now, following the BRICS Rio summit and Trump doubling down on tariff threats, the gloves have now come off. Now, in keeping with the overall BRICS mandate of taking barriers down, really to empower multipolarity, the focus on the Rio BRICS summit was on providing, this is the key thing, the necessary financial multipolarity to be able to price and sanction-proof commodities into a blend of BRICS local currencies. Now, completely missed by the mainstream media and the Western observers is that the complex task of benchmarking trillions of non-dollar denominated intra-BRICS trade will be benchmarked by pegging this blend of widely varying national currencies to a prescribed weight of gold. Now, as we've looked at last time, this de-dollarizing effort is actually being facilitated with the expansion of the new development bank, the NDB, bolstering into BRICS national currency trades, ultimately benchmarked to gold, a percentage of gold. Now, Russian Finance Minister Anton Silonov confirmed that the NDB had formalized a multi-billion-dollar sanctioned tariff-proofed cross-border settlement hub backed up by loan guarantees for mega infrastructure projects across the BRICS sphere. Now, we put up some links on these initiatives last time, but in short, with over 80% of the world's population gaining economic weight and already controlling 40% of all global trades, Trump's tariffs are nothing short of war measures into which the BRICS nations are countering to rapidly consolidate resources. Now, the NDB are consolidating with supporting Chinese initiatives as well. And this is not just a soulless operation. This is really well put together. And so they understand that the provision of the necessary financing is required to bring this forward. And there are a lot of instruments under this initiative, but LBMA are losing control of this counterintuitively based 50-year price suppression game, which has allowed them to cash settle gold alongside every other fiat diluted asset. And they're losing this control because in aggregate, the BRICS nations have now accrued sufficient physical market liquidity to actually benchmark this self-arbitraging, fungible global sanction and tariff-proof gold price for T+0 settlement. We're talking instantaneous settlement. So in sync with the NDB rollout, China's cross-border payment system, the CIPS, already interconnects with 4,900 banking institutions, and it's growing by several every day. The CIPS settlement platform actually overtook SWIFT transactions in April. I thought it was May, but it was April. So tokenizing these BRICS collaborations into stable coins backed by real assets, along with a race to secure as much gold as possible to back the value of each nation's foreign exchange currency, provides BRICS nations and their counterparties with a very liquid 7-second settlement process. Now, following Trump's 50-day Russian and BRICS counterparty tariff sanction threats that followed 2 weeks, I think it was last week or the week before, when we saw freshly weaponized EU-Russia sanctions, what we have is credible information. The already beta-tested 40% gold-backed decentralized sanction and tariff-proofed blockchain rails are about to formally launch. The clues are actually all there.